Paul, when you look at these numbers and these trends, the question is, are we due for a correction?
Well, yeah, I mean, really, what we're looking at the tech sector overall is that we've really seen, you can't stress enough how much the sector has matured over the last several years. Prior to 2013, the sector never experienced a pullback. You always saw a pullback of at least 10% in a given year. Since 2013, we're on pace now for the fourth year where it hasn't pulled back more than 10%. So tech has matured. The maximum median drawdown is a lot smaller now in the last 10 years than it was in the prior 20. And what you look at right now is the current headlines for the technology sector are phenomenal. You have, a dovish Fed. You have economic growth, but slowing. Now, look at the economic data points that we've seen since the start of August. All 5 regional Fed reports showed deceleration, 4 were weaker than expected. Consumer confidence is weakening. And then you also saw the miss in ADP private payrolls. They're all positive, but they're all showing weaker signs. So that is an environment where growth becomes more scarce, which is positive for tech. And when you see the COVID numbers continuing to rise, that should be another reason why investors gravitate towards more of these tech stocks, which have consistent growth. But the key here is that, to your point, Julie, what you just mentioned, are we due for a correction? What's really interesting is that while the tech sector is hitting record highs day after day, it seems, today is the 1-year anniversary where the sector peaked relative to the S&P 500. And it hasn't taken out that high from September 1st, 2020 yet. So, we've rallied off the lows on a relative basis since May 12th, but we still have yet to take out those highs.
Now, Paul, when you look ahead towards the rest of the year and the fact that the whole sector has been performing well, are there certain elements, certain parts of the sector that are better positioned to break out between now and 2022?
Yeah, so first for the overall tech sector as a whole, just like the market, it's one of those things historically where strength tends to beget strength. So you have years where the tech sector was up 20% or more through the end of August. The average September was usually a coin flip, whether it was positive or negative. But for the rest of the year, the median gain was 10% for the tech sector going forward. So it tends to be positive going forward. Unlike a lot of other sectors where we've seen dispersion, most groups within the technology sector are right at or near 52-week highs. The one exception is IT services, where that group has been lagging recently. And IT services is primarily 40% of the sector is Visa and MasterCard. And a number of the deals that we've seen over the course of the last month with these, buy now, pay later, and, Square buying Afterpay, and some other deals, even Amazon with Affirm, are sort of, getting investors to wonder if the, very strong moat that these two stocks, Visa and MasterCard, have had, is going to be a little weaker moving forward.